Hi guys, today we are starting a new topic, economic sector in India. So let's go. The Indian economy has benefited greatly from the evolution of banking sector. As for any economy, the banking sector is the backbone of any country financial institution which due to the any economy is evolved. The history of banking began in ancient world what began a straightforward barter system and a gift economy has evolved into an internet-based technological-driven globalization banking sector. As the economy is shifted from the barter system from the technological-driven and globalization world, the function of the banking sector. What is the function of the banking sector? The banking sector is an essential part of every country financial institution. It affects the country economy by which providing credit, infrastructure and investment. Indian economy has a big role in the growth of economy of India, not in Indian economy, but for the any country, the banking sector is the core for the any nation financial assets. Every country economy lie in banking sector. When the bank function well, only then it benefit national building. So let's start. What is the function of the banking sector? So business growth. Indian banks facilitate trade and commerce. It offers payment facility to various local and international businesses. As banking sector provides the locals and financial businesses financial stability. How can we provide a financial stability? Through SBI. SBI help to bring stability to the system by regulating the monetary policies. The advancement of credit and cash management. Now what is the credit and cash management? As it provide the cash to the society so that we can use the money for the various payments. Crowding of private sector. It helps bank handle of money transfer to credit by the many industrial units and business houses. What is the financial security? Offering loans. Yes, it offers loans and paying reliable remittances services. So you guys know what is the remittances services. Let me explain you what is the remittances. When a people or living in the foreign countries and they send money to their families or their relative this is called the remittances. To improve savings. Now managing assets such as gold, silver, diamonds. Next, agencies function of the bank. This include transfer of money, periodical collection of dividends, salaries, pension. As you guys know, your fathers and your mother father and mother's account, there is a monthly bank provide monthly salary to your in their account. This is called the pension. And your grannies and various things, they provide the pensions. Specialized institution for specialized service. Exports of imports. Now what is a specialization institution? For the agriculture investment in credit, there is a bank called NABARD. For the imports and export import and export function, there is the MX banks which regulate the special functions. Now next is, and this is the last, promote social justice and acting as the harbingers of changes. Yes, the bank never discriminate. They provide loans to the poor and they provide loans to the rich. They differentiate between the poor and the rich. That is why they are the sector which provide equality between their people. Now the banking sector perform crucial in functioning of financial intermediaries, payment systems, supporting economical growth and making vital components of financial system and the overall economy. Now what is a non-banking financial institution? So you know that there is also some other institution besides of the banking. This is all, they are called the non-banking financial institution. Now let me study about what are these institutions and what are their works. In NBFCs are companies registered under the Companies Act. They are registered under the Companies Act, provide various financial services like, what are the services like loans, insurance, assets management, but they do not have the banking license, but they are registered under the Companies Act. Now, business areas. What areas are come under these, like loans, advances, acquisition of sales, stocks, bonds, debentures, securities, issues of governments or local authority or other marketable securities like market, leasing, hire, purchase, insurance business and chit businesses. Now, what it does not include, institution whose principal business is that of agriculture activities. So agriculture activities institution they did not include. Industrial activities, purchase of sales of any product, providing any services of sales, purchase, construction and immovable property. Now, a regulation, it is regulated by the RBI under the Act of 1934. Now, let's study the various types of non-banking financial institution. There are the non-banking financial companies. There are various financial companies like microfinancing institution, assets finance companies, factory companies, infrastructure finance companies, core infrastructure companies and infrastructure debt companies. Now, there is also a mutual benefit financial companies like nidhi companies and others like chit funds. You have read or listened about the chit funds in your life. This what is called a chit funds. Significance and issues with non-banking financial institution. Yes, there is some importance of NBFCs, but there also are some issues. Now let's study the significance of NBFCs. Financial inclusion. They provide a financial inclusion by providing lending and financial services to underrepresented population. What? Underrepresented population, especially where the bank जहाँ पहुँच नहीं पाता, it provide the services. Engine of growth. NBFCs are key financial to MSMEs, infrastructure product and significant growth of the small scale and unbanked sector. It provide the services to the MSMEs and where bank नहीं जा सकता. Credit access, provide credit to various population segment including individual, small, medium enterprises and large corporations. They are flexible. As they are flexible, then bank because bank provide so many papers work and you have to give assets to take the loan, but there is a I think less flexible than the bank. They provide credit to those who may not lending the stringent requirement of traditional bank that I have already told. Now, mobilizing savings from different resources such as retail investment, high net worth individual, institutional provider. These savings to financial various activities. Provide investment service like portfolio management, investment advisory, distribution, financial product. Now, provide payment services like issuing debt, debit and credit card, electronic fund transfer and mobile banking. What is the issues with the NBFCs? There is there is also some issues with NBFCs. Multiple regulatory body different according to the types of NBFCs. There is a multiple regulatory body, so there can be sometimes multiple regulatory body, so there is difficult to which function who is performed, or sometimes there is a mismatch between them. Assets liability mismatch. Funds borrowed from the short term, as sometimes they borrowed from the short term but the tenure become the long term, so they become less profitable. IL&FS crisis lead to the decreased liability on NBFCs because there is a crisis happen. Investor due to this, they are less reliable than the banking sector, less caution credit habit. NBFC has grown their portfolio of small and micro loans where their risk of high NPA. What is NPA? Non-profitable assets are in small and micro loans. When they provide, they have a high risk of NPA. NPA is non-profit assets. Delaying project due to the delay statutory approval, land acquisition delay, environment reliance delay. Yes, can be a delay. Unsecured deposit of the lender, unlike bank. Project is delayed because they not provide or giving the previous loan which have they taken. Regulatory oversight. Increasing regulatory oversight companies required by banks, especially host post the IL&FC crisis. So there have to be somebody to oversight their functioning for the smoothing functioning of NBFCs. Competition for fintech. Rapid growth of fintech continue providing digital lending and payment services because there is a competition in fintech. Now what is there is a current connect भी है. Reserve Bank of India in the financial sector reported 2024 stresses in NBFC sector can be access to be the higher. However, resilience of NBFC sector has been improved by CRAR 27 and gross non-performing assets 4% and returning of assets 3%. This is the quite good percentage. Now what is the way forward or way ahead? How can be improved or which step can be taken to improve their functioning? Strengthening governance for sure. For improving the every or any sector, there should be a strengthening governance so that the risk management and asset liability become less. Diversification. Yes, diversification, the short-term borrowings to diversify from long-term bonds. Leveraging technology, adopt digital technology to enhance customer experience, improve efficiency and manage risks. Consolidation and merge, like merging of the small to the large players, and creating a body to monitor. That I have already told more to creating a body of which can timely see the functioning. Timely project clearance, reducing the bureaucratic hurdles. If there are less bureaucratic hurdles, then the project is smoothly functioning. Allowing large NBFCs to seamlessly become bank by bringing consistency in regulation like CAR required. The coordination consultation approach to address infrastructure credit issues. RBI has proposed what, and there is some of the steps which RBI has proposed. Creation of the 4-layer regulation framework. The degree of regulation depends upon the perception of risk in every layer. For the 3 layers, that each layer has the higher risk. Classification of NPA. NPA is the non-performing assets to NBFCs from 80 days to 90 days overdue. If they have not given the loan, so they can specify their reduce 80s to 180s if the loans is not giving yet. Now what is the conclusion? NBFCs play a significant role in financing inclusion, economic growth by providing diversifying financial services. However, they need to address challenges like the liquidity, governance, competition to ensure the stable growth. Like end the topic. Now for the next video, it's end our video. We will come to the next topic with the next video. Bye. Good night.